Is real estate, residential real estate, under stress right now, including fix and flips? Is it under stress to the point maybe you should get out? Well, that's what we're going to talk about today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you, those that work so hard for your money, and you're now ready for your money to start working harder for you today. You want that freedom of cash flow right now, not 30 or 40 years from now, but you want it today to live the life you love with those that you love. But most importantly, guys, I know it's not just about a goal to get rich, although we want that too. But it's about living a rich life, because as you're blessed financially, you have greater resources and means to bless the lives of those around you. Guys, thank you so much for allowing me to create this ripple effect through you. You guys have been very loyal listeners and watchers. If you're on YouTube, of course, you've been tuning in and everything else. Hey, if you guys wouldn't mind, give us a shout out. Give us a nice little, like or whatever it might be, or even if you're listening to this on Spotify or Apple Podcasts, give us a review. We'd love to be able to have great reviews to be able to hear from you guys, especially if this has created any value for you in your life as well. All right, guys. So I'm bringing on Chris Seveney back to our show again. Now, it's been several years since we've had him on. So for those of you, even if you've been binging on these episodes, you probably haven't binged back far enough to see Chris's previous interview. So I'm excited to bring him back on today because although he's had 25 years of experience and done millions upon millions of dollars of deals in this space, just talking off the air, he kind of surprised me with something that I thought we should definitely dig into a little bit here. So I was going to take this one direction and decided after talking to him, we got to take this another way, because I think it'll be very valuable for you guys to hear about what's going on in the real estate market right now, whether you should be scared or whether you should be a little bit greedy and frothy, because there's definitely some opportunity there too. So Chris, welcome back.
Chris, thanks for having me. And I'm sitting here thinking as you're doing your intro, I'm like, man, I should just have Chris do my intro for our podcast because you got that down to a pat.
Well, I mean, you're almost like episode 900, so that's I guess what happens. Even the worst of us can eventually get some habits down, right?
900, congratulations. We're I think approaching 300, and it's a long road for people who stick with it. So congratulations.
Well, even 300, that's amazing, Chris. By the way, what's the name of your podcast that they can follow?
Yeah, Creating Wealth Simplified.
Creating Wealth Simplified. Yeah, I mean, 300 is no small feat either. Most people never even make it past, what, 20, I think it is.
Yeah, 10 or 20 is usually where people kind of throw in the towel.
Right, exactly. No, you've definitely been die hard as well. So I appreciate that. Well,
Thanks.
tell us a little bit more about your background and what even got you down this real estate path in the first place.
Yeah, so my background is I've always been in real estate. When I graduated college 25 plus years ago, I was working for a large commercial contractor and managing some really cool multifamily, office, retail. I mean, you name it, I've pretty much built it in my career during that period, first 15 years. And then after that, of getting burnt out and hitting kind of your early midlife crisis, I went over to what was at that time the proverbial dark side, which is going from a contractor role to a developer role. And I spent, several years working, running a multifamily division for a Washington, D.C. based developer, and then went on to manage a $2 to $3 billion portfolio of mixed, all different asset classes for a local family office as well in the D.C. area. And then I finally made the leap to go out on my own. 10 years ago, I started investing more heavily in my own future, and then kind of during COVID, realized after, several conversations with my wife, hey, I want to go out on my own, and started a mortgage note fund, which I've been doing defaulted mortgage notes now for 8+ years. And like you mentioned, prior to hopping on, we'll talk a little bit about what I've been seeing in the marketplace, because I think it's going to surprise people.
Yeah, it definitely sounds like it. Now, before we kind of jump into that, you're also an avid Boston sports fan. Is that correct?
I am. So
Is this
used to be
hockey, baseball, basketball, football? What is it?
all four. I've used to be a Patriots season ticket holder. I watched them lose the Super Bowl in Indianapolis a decade ago to the Giants. I again just watched the 20-year documentary of the 2004 Red Sox on Netflix.
I just watched the same thing. Yep.
Yeah, and then seeing the Yankees lose the other night to the Dodgers in that fifth inning reminded me of the blunders of being a little kid and watching Bill Buckner break my heart, or Bucky, or Aaron Boone actually, who broke my heart 20 years ago. Which now, of course, the interesting thing I was chuckling at was Dave Roberts, who's the coach of the Dodgers, was the hero for the Red Sox in 2004, and Aaron Boone, of course, who coaches the Yankees, was a hero for the Yankees in 2003. So even though I
Wow.
don't really appreciate or like either team, I of course had to root for the Dodgers because they got more former Sox players on their team.
It becomes a little bit more personal now, doesn't it?
It does. So
Well, that's fantastic. Well, so now, like you said, you've got more into the mortgage note space, right? You kind of
yeah.
pivoted that direction. Why'd you pick notes in the first place?
Uh Great question. And I always joke, depending on the conversation, I either thank or blame my wife. Lately it's been thanking. And the reason why is we had rentals and we were building a portfolio here in the DC area,
Mhm.
and we had young kids. And I'm a numbers guy, I'm a finance guy, I'm an engineer by trade. And it was just way too much hassle to try and get a property, get it rehabbed, manage a rehab of it with little kids. And my wife, after we did several of them, was like, okay, this is too much, find something else to do. And I stumbled upon, first it was actually tax liens. And I was like,
Mhm.
okay, let me try this. And I was like, wow, this is really boring. And I really didn't find a way to have a competitive advantage.
Mhm.
It's you buy and you just wait. Do they pay? Do they not pay? It's kind of, there's nothing you can do in between.
Yeah.
And I stumbled also at that time mortgage notes and I didn't realize this existed. So it was really eye-opening where, hey, look, I can buy somebody's mortgage. And most people don't realize, thinking it's just all Wall Street, but a lot of defaulted loans make their way onto the secondary market.
Yeah.
So I could buy a loan that's a year or 2 years behind. And then, I'll say game theory, plan and strategize. Okay, if this, then that. Like, we'll take this path. What's the borrower do? And you're basically playing a game of chess with the borrower. And I come from a conflict oriented business of commercial real estate in New England, which is all union based.
Mhm.
So literally, you're basically screaming at people all day long, always dealing with attorneys. And I'm like, I could take a lot of the relevance of my background and apply it to mortgage notes. So yeah,
Mm.
that's how I ended up getting in mortgage notes, because it allowed me to invest and do it from my house. I didn't have to travel, go look at these properties, and do it at any time during the day.
Yeah.
It's not like this property is for sale. You got to be there and go look at it and put a bid in. On a mortgage note, it's like, okay, here's a list of assets. Give me your number by next Friday. And it's like,
Mhm.
oh, okay. It's not time sensitive, which is really key in creating and growing a business and creating flexibility.
Absolutely. Yeah, it's now for those that aren't certain of what mortgage notes are, if you have a mortgage on your property, your bank holds a mortgage note on your house, right?
Yep.
That's essentially you're pretty much the lender. You're like the owner,
Yeah.
the controller, but you're lending the money, right?
Yeah. Most people, after 3 to 6 months, they buy a house and they have a mortgage. They'll get a letter in the mail that says, please make your payments to this new company.
Yeah.
Your mortgage was sold. Your mortgage was sold. And
Mhm.
now there's a new lender. Your mortgage could have been sold to me. Now, if you're paying on it, most likely it wasn't,
Right.
because but if you're 2 years behind, you could see, my name pop up or my company's name pop up on your mortgage.
Interesting. Yeah. Now when we were talking just before we got on the air, you said that there's something interesting because we all know, and I've mentioned this on a show many, many times, apartment buildings. We
Yep.
know the last since 2022, definitely a lot of stress. Self-storage is still under stress. Apartments
Mhm.
probably coming out a little bit sooner than that.
Mhm.
And then residential properties didn't seem to suffer a whole lot, right? It
Mhm.
seemed much better than like the 2008 crisis. But
Mhm.
because you have this benefit, like you said, you're able to be virtual, like you're able to be in multiple markets, even
Mhm.
far away from Boston. You're seeing
Mhm.
some things happening right now. What are you seeing currently?
Yeah, we're starting to see a lot of cracks in the what's now considered the residential transition loan business,
Hmm.
which has been redefined from, most people know it as hard money or private lending.
Yeah.
It went through a transition because the large companies wanted to rebrand because hard money has a negative connotation.
Hmm.
And those businesses, which now call them RTL loans, are literally the amount of product they're putting out the door is extremely significant because many people today aren't buying houses to live in, they're buying them for investment purposes.
Yeah.
Now, as part of more of those loans being seen or issued, what we're seeing, because we're usually on the front lines, we get to see things happen before people hear a lot in the economy on defaults and so
Mhm.
forth. But literally this week, we've gotten over $400 million of defaulted fix and flip loans on single family homes.
Wow.
And it's interesting because it's not just in Florida, it's just not in Texas. There are significant ones in there. And what we're seeing on them is a mix of people because, we get to see how much experience these people had, some with little experience and some with a lot of experience.
Yeah.
And one of the areas that we're seeing is, these loans, which were typically originated, let's see, early 2023.
Hmm.
They've already went past their maturity date because they're 12 months.
Yeah.
And when we look at the information that what they anticipate what the ARV would be on those properties,
Hmm.
compared to probably what it's going to be today, they're off. Meaning, for example, we did see one in Florida that they had an appraisal from a year and a half ago that thought the property would be worth about 650. That property today will not even get you close to five and a quarter or 500.
Ooh.
So, they're underwater. The loan is, they owe $550,000 on this loan.
Yeah.
And again, it's just not Florida. It's just not some of these other places. It's, we're seeing this across California, the Midwest, the East Coast. It's pretty significant on where, we're starting to see these loans pick up.
Right. That's fascinating. How did those values get off so much? I mean, were people just having like just an unrealistic ARV, like the after retail
Yeah.
value when they thought they would repair it all and it'd be done, or what's going on here?
Yeah, I mean, it's really interesting because I actually had a conversation with somebody about this yesterday on appraisals.
Hmm.
And many people think an appraisal is the proverbial Bible.
Right.
And
If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now.
I look at appraisals as, you know, I don't put a lot of value to an appraisal on face value, meaning I just don't look at the number and basically, oh, that's what they say it's worth.
Hmm.
Every time I get one, I'll look at what were the comps? Were they in the same community?
Right.
Or was the condition of those properties? And what we're seeing is on a lot of these appraisals, they're picking communities that were not the same community. They're picking communities. And again, in some of these locations, you got HOAs or communities that are very different. Some might be a little higher end versus others.
Yeah.
I'll give an example of an appraisal that we were looking to acquire a loan on, and the appraisal came back at $550,000. And this was one up in New England, and all the appraisals were in. This was on a main road, the
Mhm.
property. All the appraisal comps were in a residential neighborhood, and every single home was updated. Where
Mm.
this home literally had carpet that was 25 years old. The house was trashed, and basically the comps were in the mid fives. So they came back at 550. And we were like, there's no way this property is worth 550.
Mhm.
And so we talked to the appraiser and said, we think your appraisal is off. He's like, yeah, you're right. You came back and you marked it down to 545.
Wow.
And it's, and that's where I think a lot of, some of these lenders and a lot of people also started getting into this private lending space because people have money, but they didn't want to buy a property. It's like, oh, I can lend and get 10 or 12% cash flow,
Mhm.
which, you can't get on a rental right now. So they'll go, let me go do this. And they don't know the market, the area, or, again, some areas prices have softened. I know somebody trying to sell a house in Austin that they bought for 1.4 million and they're hoping to get 1.1 for it.
Right.
10% decline or 20% in some of these markets that exploded, it can happen. So
Mhm.
that's where I think people are starting to, but also the other avenue to that is, some of these loans have taken longer. And then once they start kicking in this default interest at 24%,
Hmm.
on a $200,000 loan, now all of a sudden you're paying $4,000 a month in interest. And after 6 months, it's another 24,000. It's probably the profit or close to the money that this person was going to make in this loan. So it erodes it pretty quickly.
That's right. So how would someone, especially because we get a lot of people that are more the passive investor side, right? Those that would
Yep.
be lending their
Mhm.
money. How could somebody protect themselves against something like this?
So the three things that we look for, because we also do some, private lending,
Hmm.
is first, understand who you're lending to. What's their experience? What's their track record? How
Yeah.
much money are they putting into the deal? Some of these large companies will do 90% acquisition and 100% finance. I would never take that as somebody with my own money. I would never give somebody 90% to acquire and then 100% reno where they're only putting 10% of their own money in.
Right.
Because if it goes wrong, it's all you,
That's right.
and um, so the borrower, again, loan to value, be conservative. If it's a renovation project, don't give them all the money for renovation up front. Make
Mhm.
sure they have like, a construction draw schedule that you understand, okay, we'll pay you milestones.
Yeah.
And there's a company I just spoke with yesterday called Trinity that they will do the construction draws for you. They'll go out, they'll take the photos, they'll tell you like how much is done to confirm before you make a payment. Now,
Hmm.
typically you can charge that back to the borrower and it's $150. So if you're giving
Yeah.
somebody six figures, throw 150 bucks each time, which the borrower will pay anyways,
Hmm.
well worth it.
Yeah.
And lastly, again, that appraisal and do your own research in regards to understanding the value of the property and some of those nearby comps.
Great advice. No, that's fantastic. And of course, you have your own fund that does this as well, right? Because I could already
Yep.
see some people saying, okay, that sounds great, but maybe I don't even know where to find these deals or how to do it myself.
Mhm.
You have a fund that actually, kind of aggregates these together, right?
Yeah, so we have a fund that, and I think what's unique about our fund is it's open to both accredited and non-accredited.
Hmm.
So, we can take anybody within our fund and I can sit here and advertise it as well, which most people are like, it's not accredited, you can't talk about it. And I'm like, no, I went through the Regulation A plus process, which is very painful, and
Yeah.
we have to report to the SEC on things. But yeah, and that's where, what we see a lot of times is people interested, and I'm at fault for this too, where you look up, find something that is, you want to treat it as like a hobby,
Hmm.
or you want to do it as a little side hustle. And like I used to do this with like stocks. And I know,
Hmm.
we talk about Wall Street all the time and trying to stay off of it and stuff, but I would sit there and basically like, okay, I want to learn more about stocks. I want to invest. I want to do options. And then
Yeah.
it's like after a week, I'm like, okay, I'm done with it because I don't have the time. And it's something you have to constantly maintain and understand and stay up to speed on.
Hmm.
And we see that a lot in real estate where people are like, hey, I want to do private lending. And then they realize how hard it is to find a deal, how hard it is to find an attorney to write up your documents, how hard it is when something goes wrong. And it's great when everything goes good. Of
Yeah.
course, it's, passive income mailbox money. But the
Hmm.
moment somebody misses a payment or they go into default, then it's like, oh, I don't have experience with, now what do I do?
Yeah.
And we also share with a lot of people, okay, you can go lend at, let's say 10 or 12%, $100,000, or you can invest in a fund and make 8 to 10%. Is all that hard work and effort you're doing worth the $2,000 extra you're going to make?
Right.
And some people it is because they want to learn it and maybe they want to proceed with it. Some
Hmm.
people are control freaks like myself and just want to
Hmm.
control what they do and not comfortable with investing with others. But those are the questions people really should be when they're passive, ask themselves of what's my expertise versus somebody else? How much
Hmm.
time and what is that delta? Because a lot of people will talk about FIRE, which is financial
Hmm.
independence, retire early. I like to have, the fat tire, which is I want time independence to retire early. I'm focused
Yeah.
more on time. You can always earn more money. You can never earn more time.
That's right. It's a great point. Great point. Now, like you said, it's also non-accredited. So that means anybody could invest.
Yeah.
What's a minimum that somebody needs to invest in your fund?
Yeah. $5,000.
5,000.
So,
Wow.
and again, it's one of those things where, I invest passively as well. And when I see a minimum of 100,000 to invest, I get nervous stroking that check of I want to, basically shake this person's hand. I want to meet them. I want to do a background check on them.
Hmm.
Yeah, 5,000 is still a lot of money, but it's a lot easier to, I'll say swallow,
Hmm.
invest or, with somebody 5 grand that is 100,000. Then, say, okay, is this person legit? Are they doing what they say they're going to do? And that's what we see. 40% of, the funds that we get every month or right now from reinvestors, because they
Right.
start and realize, hey, do we do what we say we're going to do?
Hmm.
And people get comfortable with us and then continue to reinvest.
Yeah, I know integrity is a big thing for you. And especially when someone's trusting with their money, it's always nice to say, let me test it out. And then I've noticed with a lot of our clients too, it's the same thing. Once they get a few payments, they're saying, all right, maybe I'll put a little bit more in because now I'm seeing
Yeah.
proof of concept, right?
Yeah. And for me, it's about the integrity. And
Yeah.
every conversation I have with people is you want to, if things go bad, you want a sponsor who's going to be by your side, not somebody out there who's going to 57 conferences, just at speaking engagements to try and pitch something else or some, you
Hmm.
know, program. Like I know one fund right now that is going under and they're ignoring everyone. Their phones are shut off, but you see the sponsor out there pitching $50,000 training courses. And I just, I want to rip my hair
Cringe.
out one. Yeah, cringe. And, people got to realize when you do invest, that there's risk with every investment.
Mhm.
And, if there is a bump on the road, you want somebody there who's going to be by your side, not somebody who's going to abandon you.
I totally agree. Well, and now obviously, if somebody wants to learn more about this or even follow
Mhm.
you, what's the best way they can do that?
Yeah, they can go to our website, 7einvestments.com. That's the number seven, the letter E investments.com. You can find me on LinkedIn. Fortunately, my last name is very unique. There is only one other Chris Seveney that I'm aware of, and just look for the better looking one. That's what I always say, and that will be me. So,
Yeah, nobody knows this, but right when Chris first jumped on before we started recording this, he had two different filters going on at the same time on Zoom. So he looked like Santa Claus. It was pretty funny. I was like, wow, the years have not been kind since we've last seen
no,
you.
no,
So
yeah. Well, now with all the filters, maybe that's what I really look like, but I just make myself with these filters look this good. So,
that's right. Exactly. Well, Chris, here's the last question that we always ask our guests, and would love to hear your response too. As you know, it's the Money Ripples podcast, and
mhm,
it's really about creating that ripple effect, right? Like,
mhm,
what kind of impact do we have on this planet or in other people's lives? What do
mhm.
you feel is your ripple effect, Chris?
Oh, wow. I love this question, first off. For me, my ripple effect is education
Mm,
and providing education to people, and providing it, what I'll call is that free education. People reach out to me. I'm always happy to answer questions, give them guidance, give them advice, share the lessons that I've learned because I've had a lot of lessons learned, and I like to share my mistakes with people. A lot of people are not
mm,
comfortable sharing the mistakes they've made because it's an embarrassment. For me,
yeah.
hey, look, everyone can have their Facebook life, and make life look perfect with, their family and their spouse and so forth. And let's be honest, everybody argues with their spouse and gets in disagreements. And, you love your kid one day and the next day you can't believe they did something.
Hmm.
For me, it's all about being real and natural and sharing my experiences with people to try and teach them to, avoid some of the mistakes that I have making.
I love it, man. I love everything you're about that way, and I know you and I really bond and connect on
Yeah.
that point especially. So yeah, great
Mhm.
answer. Well, Chris, enjoy you. Really enjoyed having you on our show today. I really appreciate it having you here.
Chris, thanks for having me, and always happy to come on and talk shop.
For
Appreciate it.
sure. Absolutely. Everybody, definitely check out 70investments.com. Check out their stuff. Especially if you're really intrigued, you're really loving it, go check that out. And guys, here's the thing is that, this is why we try to give you this information, like get you on the ground floor, because you just never know, right? Everybody's out there telling you stuff. They're telling you real estate stinks, or they tell you it's amazing and it's flawless. The truth is it's got both, right? And I really
Mhm.
appreciate, Chris's real transparency there to kind of tell you what's going on right now. So the big question is, what are you going to do with that information? How are you going to let that change and better your life? Well, that decision is up to you. Go and make it a wonderful and prosperous week. We'll see you later.